Now here we're going to turn into the international market and look more at pricing, but we always want to kick off with, and one of the things we've been talking about is floating storage. So if you remember, Saudi Arabia just absolutely gunned their OSPs, or official selling price, to Asia. Extra super lights at $12.15 above Oman, Dubai. Extra light is $10.95 above. So when you look at what they increased, you're looking at $12.15 above Oman, Dubai, but the difference between Oman, Dubai, and Brent is $5. So when you think about just the amount of this price increase, it gets very difficult to say, well, these guys should be buying, because when you look at Kuwait to Asia, they're at $7.80 on FOB and $11 on super light, which is still, when you think about it, almost a full $1.10 below Saudi Arabia. So the sheer price differential is really driving what we've been talking about. Now, we showed 2016 just because that was when there was a lot of crude in storage just after the price war, if you remember, from 14 and then at the end of 14, you had that build through 15, and then obviously it remained in 16. But we're just going straight up, because unless you have a term buyer, they're not buying anything extra. So that's resulting in a big slowdown in exports coming from the Middle East, which is then turning and being moved into floating storage. Now, Platt said that its Urals CIF Rotterdam assessment was at a dated minus $19 on Tuesday, compared with dated minus $30 a week earlier. Tuesday's discount is the smallest since March. The company says that there has been an evolution in the Urals market in recent months, with some cargoes moving to India and China, but some shipments are obviously staying in Northwest Europe. The seventh round of EU sanctions appear to make it more possible for European entities to sell Urals to third parties outside of Europe, which we have heard have led to brisker trades, with Urals starting to return a bit closer to those levels. So again, that's where you're seeing some of the movements. But as we talked about in segment one, Russian flows are slowing because Chinese buying is slowing and remains depressed. And that's, again, so if Russia's not going to buy discounted barrels, why are they going to turn around and buy very expensive Middle Eastern barrels, especially when you compare it to Brent and when you compare it to other grades? And that's going, again, if they're term buyers, they're going to take their allotment, but they're just not going to say, they're going to say, look, I'm going to buy what I have to. I'm not buying anything else. And that's typically because you normally get headlines in talks where they'll buy their term and then they'll request an extra two. You're just not going to get that, which again is going to put more crude in floating storage. And this just puts it into perspective when you think about Dubai and Brent, which is just over $5. I mean, I think it's $5.12 in this chart, but it's been bouncing around. So when you think of $5.10, so Dubai is $5 cheaper than Brent, but Saudi Arabia is $12 more expensive than Dubai. So you get an idea of just, I'm not buying this. Like, I'm just going to wait. And this is one of the things that were saying when Saudi Arabia was looking to before the OSPs came out. We thought they were going to be a bit more cautious in terms of their increase, because this is the same thing that happened in May, where you had this huge move above to $15 on the swap, and then they came out and they gunned it to, I think it was 11.15 or 11.20, or when you factor everything in, and then it collapsed. And then the same thing happened. You had a lot of crude going into floating storage. Well, here we are with a very similar situation, which is increasing the crude oil on the water. Now, there's a mixture of how much of it is in transit, how much of it is floating storage. But one of the things that we've been highlighting is this is going to go sideways, because you have miles per ton going up, so you have more crude in transit in general. But as that starts to show up, you're still going to have that floating storage, which is just going to keep the amount of crude oil on the water at a very elevated level. And within the next few weeks, as we get into September, we're going to take out that 2020 high, because again, comps get easier. 2020, that yellow line was coming straight down into more of that normal side, and we're just going to stay at this very elevated level of crude oil on the water. Here you can see that the crude oil in transit has now dipped below where it was in 2018, but still staying elevated. And then obviously crude oil starts to move around a bit more as we get out of maintenance season, which is that September, October, and you start to see that activity pick back up. The fact that Russia is pushing more crude into the water at further distances is going to, again, keep us supported at this level. So then when you look at floating storage, here's that big spike, which is what we were talking about. We had said that it was going to go back above 2021 levels, and we just are going to stay at that elevated point. We're not going back to 2020, obviously, just because that is a crazy number. But we will be and stay above those 2021 levels because you do have a lot of slowdowns in China, with some of that floating storage remaining out there. And then those issues with the Rhine River, we've had some water levels go up slightly, but not a huge amount. So that's going to keep things a bit fixed in terms of where we are, and floating storage is going to stay a bit elevated. It's actually at the highest it's been at for all of 2022. We think it comes back a bit, but again, staying very close to that 2021 level. And in the Asian floating storage is remaining a bit under the 2021, but moving in a similar path. As we have less cargoes being purchased by China, that's going to keep this a bit flatlined. Now, they've already purchased a significant amount from Russia, so there's already things en route that's going to result on more coming into floating. As we do have more lockdowns happening, that's also going to slow the ability to bring product in onshore. Some of the lockdowns are in some of the more industrial areas, which is, again, going to weigh on things a bit more. But again, those are some of the problems that we continue to see in general. So then when we look at the independent refiners, the Shandong, here you can see that we're down to 64.3% utilization rates. And one of the things that we were saying is that we expected it to come back down. We do think it flatlines about here, just on a seasonal level, but also, again, a lot of this is being driven based on there's a lot of product in storage, there's a lot of crude in storage, and there's more lockdowns, and they haven't issued any additional export capacity. So without these companies' ability to export product, they're going to have to try to manage utilization rates, which is going to result in even less crude purchases, even more crude going into storage, as they even though they can't, again, move this product into the market, which is why we do expect to see some additional export quotas get issued in order to free this up and get these guys and in general, some of them back in action. So now when we look at West Africa, seasonally adjusted at the highs, but you can see we're right around the, just on the upper end of normal. As we have Asia slowing, this is going to put a bit more West African crude in floating storage. But given the dynamics between the Middle East and Europe and the U.S., we will see more of this coming into the U.S. We've had a big pickup in Nigerian imports. I know, shocking. And that's going to continue to be the case as we do get more of that coming through. When we look at it, ExxonMobil offered 950,000 barrels a day of Angola's Dahlia for October loading at 55 cents less than dated Brent. So again, when the last time they offered it, it was at 50. It was minus 50 cents. So if they're going below dated Brent, which is $5 more expensive than Dubai, which with Saudi Arabia $12 more expensive than Dubai, you're going to be buying this as much as you can. Obviously, it depends on the crude grade and crude quality you need. But again, this is more competitive. So yes, floating storage will remain a bit elevated, but it's not going to be like it has been. And where it has been on these huge elevated levels, we expect to see more of that in the Middle East, which is going to create a different situation. And here you can see China's super tankers, fairly sluggish. We expect it to remain down here, especially based on some of the headwinds we've already described. U.S. crude exports, gasoline dropped 224,000 barrels a day, still well above the 5-year average. As we were saying, we expect it to stay above the 5-year. Distillate had an increase of 15,000 barrels a day, slightly above the 5-year. We do expect that to come down a bit and hug, as we were saying, hug close to that 5-year component. Propane, propylene dropped 424,000 barrels a day, still 149,000 above the 5-year. That's still going to remain elevated, but there is that timing that we've talked about. And when you think about crude, which exports, which according to this were up 2.89 million, which is, to be clear, there's only about 4.1 to 4.3 million barrels a day of physical pipe and capacity to export. That doesn't include actually getting the boat into international waters. It's just the actual physical pipe that can do it. Now, there's lightering involved, so there's timing in that. So again, there is no way 5 million is the right number, but it's just, when was it filed? When was it released? So yes, 5 million is real, but you have to think about, well, the physical barrels that actually left is not 5 million. It's something closer to, again, that 3.7, 3.8, which is why we always like to take those two numbers and combine them, and why we talk so much about the 4-year average. So you'll be surprised to know that next week that number will drop, and it'll drop something closer to what it actually was as we go through this week. Motor gasoline, as we were saying, coming back within the top end of the cloud. We expect it to stay above the 5-year, but again, below that within that cloud period, as we get a little bit of a slowdown coming into Latin America. Brazil did cut, or Petrobras, I should say, did cut gasoline prices. So again, you're going to have some of that competition going to LatAm dropping off. It's going to keep it elevated, but again, not in these new seasonally adjusted highs, not at the 5-year average, but in the top end of that cloud. Then when we look at distillate, as we were saying, falling back within the cloud, something much closer to the 5-year average is where we think that's going to sit, especially given the opportunities that are provided going into Pad 1. Ethane exports had a drop, but if you're exporting that much crude, and again, I'm not saying it was 5 million, but I'm saying that it was a lot, and the arbitrage remains wide open, which is going to keep that crude moving into both Asia as well as Europe. So this is going to be a bit lumpy, but we expect a big snapback in ethane exports as well. And here is that crazy crude number. But again, when you average it out to the over the last 4 weeks, we're sitting at about 3.793 million. And that's right, that 3.6, 3.7 is definitely where we think that number is going to sit, especially given, again, the arbitrage that sits in the market. Propane, propylene had a drop, but again, it's still staying at the high end. We expect that to remain fairly elevated. Now, just pulling forward the Fujairah data, we had a big increase in light distillate. So in total, the product stocks were at 23.77 million. That's a drop which was a drop of 340,000 barrels. But when you look at the stocks movement, saw a build for light distillates while middle distillate and heavy dropped. Light distillate rose 981,000 barrels to 8.6 million. It's the highest level since June of 2019. They were last higher on June 17th, 2019, when they stood at about 9 million. So again, you're seeing that build on that light distillate side, which is the concern that we've been highlighting. East of Suez gasoline complex was seen slowing further in parts of Asia, with the Philippines identified as seeing an ebb in demand as summer school holidays approach. Their conclusion in tender Sri Lanka was heard seeking some barrels, but some of those tenders are set to close and some of them have been rescinded. So again, we just see Asia as the big slowdown. When you look at the light distillate front, stocks of middle disti fell 710,000 barrels to 2.928 million. Falling below the 3 million level for the first time since mid-July. East of Suez gas oil complex was weighed down by supply-side pressure, with fresh sell-side tender activity keeping sentiment in the market bearish in the short term. But even if it's bearish, you're still seeing we're at a very low number. And remember, that's east of Suez, while west of Suez continues to be a bullish side, with a lot of this product continuing to head into both Europe and the U.S. Stock of heavy resid fell 611,000 barrels, it held above the 12 million barrel mark for the 7th consecutive week. Trading activity for bunker in the port was seen as average by market. So again, not too much to go. The delta is going to be, when does Central Asia, some of these other areas which are experiencing record level pricing for LNG and middle distillate or diesel, are pivoting again into that high sulfur fuel oil in general. The Brent time spread, you can see it's come down to about 59 cents. It's a huge drop in general. We do think it flatlines and actually starts to turn a bit higher, which again will support Brent pricing. When you look at where things are, Russia's set to cut its export duty for crude and fuel oil in September to $52 a ton, a drop of 1.9% from August due to lower average price of the Euro grade, which isn't surprising. Again, trying to incentivize some of that to continue to move out. When you look at different prices, as we said, Exxon has cut pricing for Angolan crude from negative 50 cents to negative 55 cents below dated Brent. And that's what we're seeing. We're seeing some of that competition. Equinor offered Oseberg at dated $4.25, positive $4.25. It was initially $5.05. So you're starting to see some of this compression where they're just, again, you're starting to see the spreads come down. And as the spreads come down, that's going to make Middle Eastern crude look even more expensive. And that's why we've talked so much about that floating storage and some of those key pivots. So here, when we look at the total flows, Russian flows continue to move higher in August. There's nothing changing there. Nigeria should see a little bit of an additional in September. We're still waiting for the official release of the Angolan loading schedule. It shouldn't be too far away from where it currently is, as the stalemate kind of continues and Libyan flows remain just above 1 million barrels. So now when we look at Genscape, as we were saying, crude bounced a bit. It's going to remain a bit depressed. It should start to creep a bit higher, but again, remain at a bit of a depressed level just as we go through the Rhine issues and just the amount of flows coming through. Now, this is going to be a bit of a repeat because we discussed this last week because remember we filmed it a bit late, but gasoline had a small drop. Gas oil had a small build, but when you look at the gas oil position, it's still the rate of change we should be building. We're not. Gas oil continues to be a huge overhang in Europe. You can see that there was a small drop in gasoline storage, but we're still at record levels, slightly below where we were in 2020. But given the demand slowing in Europe, again, we expect to see more exports from Europe. And then fuel oil, it's starting to creep higher, so we do expect some discounts to start, and that'll push more fuel oil into both Central Asia and Asia in general that can be used for electricity burn. Singapore, as we've been saying, we expect total stockpiles to stay fairly flat. And the reason why we say that is because light distillate, as you can see here, is at massively just record levels, slightly below the high of 2022. But as you can see, at records versus the historics. But at the same time, middle distillate still continues to be at near record lows. So again, above record highs in light distillate, right at record lows for middle distillate. And then resid is starting to come back down as some of this gets pulled into the market for electricity, which we expect this will find some competition with some of the product coming out of Europe, which is why we expect resid and heavy disti to stay fairly close to that 17-year average and not too much one way or the other, really with the difference being between light and middle. North Sea had a small build. We expect some of these builds to continue on the floating storage side, which is why we're starting to see some of those discounts. And then the same with Europe. This is going to be some of that timing delay of what can get moved through the Rhine, what can get moved through into the rest of Europe. And that's also going to result in some additional price discounts, which we've started to see, and we think will continue through the end of September. So that's what we have for you today. If you have any questions, again, you can find us on the comment section or on Twitter. And as always, we appreciate your support. Thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.